Okay, peeps, welcome back. So, today we're going to be talking about how this one move could send the price of TSLY flying higher, which is the Yield Max TSLY ETF. Let's get it. Now, what one move am I talking about? Well, we're going to get that into that here in detail in a minute. Um, it has been quite some time since we've talked about the TSLY ETF. You guys are probably wondering why we've chosen to pick this particular time of all times to talk about it. Well, the reason being is because I personally feel that this is the most relevant time to begin discussing TSLY, and why we could see a serious reversal to the upside on the horizon. And what I mean by this is that the price of TSLY would be going much higher. So let's get into it. So we take a look at the current price of Tesla here. Something that I want to point out to you guys is the timeline on which all this played out. So as you guys know, basically the entire year of 2023, the Fed has been raising rates. Then they halted, and then they recently just came out if you guys have been following us on X, you know that we talked about this. We also made a previous video about that. We will leave that in the description for you guys down below. But we basically came out and finally said that, hey, the Fed is getting ready to cut rates, because Jerome Powell basically came out and said that they're pretty much more or less officially done raising rates at this point. They tried to spook the market and be like, oh, yeah, if inflation looks like it's going to keep going up, we'll have to raise rates again. You know, the typical trying to spook the markets or whatever. But the markets didn't care. I mean, you guys can take a look here at the prices yourself. Pretty much everything moonshot on that day, including crypto. So if we take a look at the futures prices, you can see that the S&P 500 is at 47.68. The previous all-time high was at 48.08. Nasdaq's previous all-time high, I believe, was 16,767. It's currently at highs. Or no, I'm sorry, that was I think it was 37,767 or something like that on the YM, almost at highs. But I'm pretty sure the Nasdaq's at highs because we actually trade the Nasdaq in futures. Russell 2000 is getting there. It's got about another 400 points, but I mean, even silver went up $1 that day. It was kind of insane how bullish things were on that day. But yeah, anyways, the Fed came out and basically said that they're done raising rates. And they're going to begin getting ready to cut. The markets have forecasted, and we'll show you that in the previous video, which we'll leave in the link, that the markets have forecasted that basically they're expecting at least 5 to 6 rate cuts next year. The Fed has come out in their dot plot and even stated in the dot plot that they're expecting at least 2 to 3 rate cuts next year. Keep in mind, the Fed is not really ever going to tell you what they're really going to do. So we see the Fed as playing a conservative hand at this point, which is typical for the Fed. That is the historical behavior of the Fed. They always try to err on the side of caution when it comes to keeping inflation under control. We think that their rate cuts are going to be more generous next year. We think they're going to cut between anywhere from, I would say, probably 250 to 400 basis points. It seems extreme, I know, since the Fed funds rates is at 525 percentage points right now, but that's what we think. So why does this matter? Well, here's the deal. I hate using that term because that's what Biden uses. But anyways, here's what's going on. So back during the previous Tesla earnings, as you guys can see, the market kind of sold off on the earnings. They did make money. They were still profitable. They just kind of missed estimates. And you can see that the market's pretty much just absolutely punished the price of Tesla. They did not care. They're like, yeah, we're selling out. We don't care. And the price dropped, and the price of Tesla also dropped. Well, in my opinion, the reason why the price of Tesla dropped was not because of the earnings estimates miss, but the reason being is because of the commentary by Elon Musk and Tesla, basically coming out and saying, well, we have to cut prices on our vehicles because the Fed is making it very expensive for customers to be able to afford our cars and our vehicles at full price. Right. So yeah, you can see here, we'll leave this in the description as well so you can read it, but you can see here basically they talk about the price of cost declines. So basically the theory here was that if they cut costs, they would be able to offset that with increased sales. Investors, from an investor's perspective, kind of what we really wanted to see was Tesla and Elon Musk could just simply not bother with the price cuts, just leave the prices at higher prices. If people want to go and spend $120,000 on a Tesla Model 3 instead of 80,000, well, that's their responsibility. Let them. If they can afford it, let them spend the money. If they want to be financially irresponsible, let them be financially irresponsible. It's not Tesla's job or Elon Musk's job to worry about whether the customer can afford a vehicle or not. It's the company's job to worry about being profitable and making money year over year. That's what investors care about. They do not care about whether Tesla thinks that customers can afford their vehicles or not. Okay. And maybe it reflected in their numbers, in their sales, stuff like that. We're not sure. But I mean, the reality is if people are going to spend the money, they're going to spend the money. They're not going to care what the price is. That's just the bottom line. People every day, every month of the year are going out and buying way more house than they can afford. Way, way more. If their real budget says they can afford a $150,000 house, you can bet that they're probably going to go buy a $400,000 house. That's just the way consumerism works. That's why we kind of thought it was. I mean, we understand the reason long term behind doing it, but we kind of thought in the short term it didn't really make sense. So here's the one reason why we think Tesla is going to skyrocket based on this. Okay, if you flip the script on this and you say, well, they basically cut prices because the Fed's raising rates. Well, the Fed just came out and said they're done raising rates, so they're getting ready to cut. So when the Fed cuts rates, theoretically, Tesla will come back out and raise prices again, assuming that we don't go into a hard landing recession, which in my opinion, we're not going to because that was priced in last year. So when the Fed cuts rates, Tesla will, in theory, raise the cost of their goods and services again, raise the cost of their vehicles back up to what they were before, thereby increasing profitability in the company and also thereby improving investor confidence in the overall stock of Tesla. Now, when that happens, Tesla will moonshot back to the upside, and also Tesla will go along with it. So Tesla, as you can see, during that whole time frame, basically we had the sell-off here, and Tesla bounced off this major support. So we want you all to keep in mind, if we scroll out here to the weekly, Tesla has kind of been in this, on the technical perspective, been in this kind of coiling market here. It's been in this what's known as a I guess you wouldn't really call this a wedge pattern. I don't know what you would call this, but normally this would be like a bull flag or a bear flag, but there is no pull here, so it's kind of just coiling up, getting ready to pop out. From the look of it, technically, it is pushing back against this resistance. If it has a candle close above it, the next target would be 312, and then above that, you're taking a look again at $400, which was pretty much what the price of Tesla was back in November 2021. Now, keep in mind, the price of Tesla does not even need to get back up to $400 for Tesla to get back up to $18 a share, because Tesla was $18, I believe, back here in July, and Tesla was only $300 a share. So I understand that this is, the option incomes or option ETFs don't work strictly based on this, but it is something to keep in mind. MACD is about to have a golden cross to the upside off of the break-even level. It's in bullish territory, so that's a good sign. So we'll pop over here to Tesla. As you guys can see, Tesla is kind of having a bit of a bounce here, still struggling at that support level. The next target for Tesla would be all the way up at 1337 at the peak. Then as maybe as much as 1463. And then could be looking all the way up to $17 and then up to $18.50 a share. So again, the one move that we think that is going to cause the price of Tesla to skyrocket is when the Fed cuts rates, Tesla will raise the price of their vehicles and their services, which will increase profitability in the company. And also, simultaneously, the share price of Tesla will go up, and the $6 trillion in cash that's sitting in money market funds on the sidelines will probably start flowing back into the stock market, because when the Fed cuts rates, A lot of these investors are going to expect a dump. In our opinion, it's not going to happen, but whether it does or not, that $6 trillion will start to come back into the markets and push the prices higher, which Tesla basically reflects the price of Tesla. So there it is. We should expect the price to go up. So, anyways, hope y'all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.